why Indian stock market crashed today? Today, billions were wiped out from the Indian stock market in just hours. But what happened? Is it a temporary dip or the start of something bigger? Stay with me because I've got a special surprise worth 21,000 rupees if you watch till the end. Plus, we'll reveal a secret trading hack that can change the game for you. Intrigued? Let's dive in. So, why did the Indian stock market crash today? Today, the Indian stock market faced a bloodbath. The Nifty 50 fell by over 300 points, dragging major companies like Reliance, HDFC Bank, and TCS down with it. But what exactly triggered this massive sell-off? Was it global cues, rising inflation, or something more unexpected? Let's break it down step by step, starting with one major culprit: global market fears. Global markets sent shockwaves. India is not an island. Whatever happens in the global market has a direct impact here. The US Federal Reserve's decision to raise interest rates sent shockwaves across the globe. The S&P 500 dipped sharply, and as expected, this created a domino effect. Foreign investors pulled out billions of rupees from Indian markets, leading to a crash in NSE. But that's not all. The Indian rupee also weakened against the dollar, which further scared off foreign investors. The selling pressure continued throughout the day, and sectors like IT and banking were hit the hardest. Domestic concerns, inflation and rising oil prices. As if global cues weren't enough, India is also grappling with internal issues. Inflation is soaring, with food and fuel prices at an all-time high. And you know what that means: higher costs for companies, reduced profits, and less consumer spending. Investors saw this as a major red flag. Combine that with rising crude oil prices, which have breached the $100 per barrel mark, and it becomes clear why companies like ONGC and Indian Oil were the biggest losers today. Technical analysis: NSE stocks plummeting. Now, let's look at the charts. From a technical perspective, it was a disaster. Nifty 50 broke key support levels at 19,300, signaling a bearish trend. The RSI, or Relative Strength Index, showed extreme selling pressure, dipping below 30, while the MACD gave off strong sell signals across various sectors. Stocks like HDFC Bank and Infosys saw their prices nosedive as they broke crucial moving averages. The sectors hit hardest sector-wise. Banking and IT took the biggest hits. HDFC Bank, ICICI Bank, and Axis Bank all saw massive sell-offs as concerns over rising NPAs and slowing credit growth spooked investors. In the IT space, giants like Infosys and TCS were crushed as global recession fears spread. Infosys dropped by over 4%, while TCS plunged by 3%. With rising inflation in the West, IT outsourcing companies are bracing for weaker demand, leading to panic selling. Fundamental analysis: is this a buying opportunity? Now, here's the question every investor is asking: should you buy the dip? Well, that depends on your risk appetite. Fundamentally strong companies like Reliance and HDFC Bank have been oversold. So, if you believe in long-term growth, this might just be the golden opportunity to accumulate. But remember, don't jump in blindly. Check the company's earnings reports, debt levels, and growth potential. This crash could be temporary, but always make informed decisions. What's next? Outlook for tomorrow. So what's in store for tomorrow? Experts believe volatility will continue. Keep an eye on global markets, particularly the US jobs data, which will dictate foreign investor sentiment. Also, domestic cues like inflation data and RBI's next moves will play a big role. Tomorrow could see a bounce back, but don't expect a full recovery just yet. Markets are fragile, and any negative news could push them lower. Now, the special offer and final thoughts. Now, as promised, here's your special surprise worth 21,000 rupees. If you subscribe to this channel and send me a screenshot on WhatsApp at 911321111787, you'll get access to 5 exclusive financial calculators absolutely free. But that's not all. We're also offering our How to Automate Trades course worth 7,000 rupees for just 99 rupees. Imagine automating your trades and making smart moves in the stock market without spending hours staring at charts. The link is in the description. Don't miss out. Smash that subscribe button, hit the notification bell, and make sure to claim your 21,000 rupees worth surprise. Let's conquer the stock market together.